Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is for Thursday, February 27th, 2014. We kind of a mixed day today where we saw the market try some higher prices, but eventually yielded to close lower on the day, at least measured by the ES and the NQ. The Dow Industrials were higher on the day, at least by a small fraction. The market internals were nothing great, but they neither were they disastrous. The advanced declines were positive on both sides by a decent amount, and the VIX popped up 68 cents, but the market essentially held up even in the face of that rising VIX. Let's move on and take a look at the major futures. All right, so here's a look at the ES futures. We essentially have the same range as yesterday, with a slight close below the open. We had a little bit of movement throughout the day, wound up surrendering just a little bit on the close. But when all is said and done, we're essentially boxed up here within this 3-day range. So make sure you pay special attention to the range set on Monday, and when we leave that, the market should make a pretty good move after winding up for a couple of days in that range. If we move to the upside, 1875 is going to be the key level. If we clear the Monday high into the downside, first support is going to be at the 10 EMA at about 1831. On the Nasdaq side of the market, pretty much the same day with just a little more weakness, a little more range. We actually traded outside the previous day's candle a little bit more effectively than the ES side did, but essentially we're still within the confines of, at least on a closing basis, of Monday's candle. So we're going to wait Monday's candle again to the upside. 3750 is going to be key resistance. To the downside, near-term support at the 10 EMA. Then much more important support here at the old breakout level right here, which is going to be coming in at about 3626 or so. Here's a look at the bonds. The bonds had another fairly decent day. Pretty strong day previous day, and today we're pivoting back to the upside again. Still pushing higher here. We're 2 days up. Keep in mind that if we do get a close above the 8 candle, we're going to wind up with that 13 secret exhaustion on the retest after the qualification has been fulfilled. If we do continue to the upside, this 7/8 level at 108.5 is going to be resistance. To the downside, we've got a double layer here, double level, where the 10 EMA converges with the 200. Oil wound up doing not too much. We're essentially inside the previous day, even after getting the weekly inventory figures. You can see that we're really boxed up in this little range. Still short-term positive above the 10 EMA. So once we break out of this range, we should get a pretty decent move. Gold futures a little bit sloppy today to the downside, but still holding above the 10 EMA. So there's definitely a possibility for a further push since we're only 4 days up in the secret exhaustion count. To the downside, 10 EMA is going to be support, and then below that, the 200 is going to be the next one that really comes into play, which is going to be just below the recent range lows. Here's the 10-day trend. The 10-day trend is still hovering pretty much in the neutral area. We're just a little bit above that 1.0 level. We're at 1.17, which pretty much splits the difference between overbought and oversold. So certainly the market could move either direction fairly substantially before we get a reading either way that would make the market, by this interpretation, either overbought again or oversold. Here's a look at the Dow Gold ratio. Started to kind of recoil here and start to hook back up a little bit, but it definitely still remains negative. And for now, the market has an overall risk-off posture. We're not really going to flip to short-term positive again until we take out this 1250 area. So it's something that we're going to keep on top of for the next couple of sessions. Here's a look at the total put-call ratio. We're still pretty much middling here. I think this is probably one of the things that really didn't give us what we were looking for, either at the most recent swing low or swing high, because we never really got that climactic reading. We were either short-term overbought or oversold by this key reading. So for now, we're just going to keep monitoring this to see if we wind up getting that climactic reading that can really move the market. Right now we're looking at the S&P TLT cross, which is definitely one of the major causes for concern here for the bulls. This has obviously broken down sharply below the regression channel that represented that positive price action, and now we're starting to see this thing roll down again, where investors are favoring bonds over the growth of equities. So this is definitely something that is definitely not in the bull camp by any stretch of the imagination. So keep an eye on this. If this continues to the downside, this is going to be trouble for the overall broad market. All right, and here's a look at the cumulative advanced decline lines. We're still positive on the New York side, starting to level off here a little bit in the last couple of sessions. The Nasdaq side has scratched out a new nominal high here. I'll zoom this in for you. Just a new nominal high, but really hasn't done much to break out yet. So definitely want to see this start to act a little bit better and put a little bit of distance in there. We had positive numbers today, but we were pretty negative yesterday. So right now, we're definitely starting to see some evidence of market churn, where the market's really not showing internally the power that some of these top names like Tesla, Google, and whatnot are showing the market. Here's the multi-sector daily chart. Definitely seeing a pullback here in the BTK after yesterday's big advances that was led by that one particular stock. XAU also returned and retreated a little bit. The Sox and the BKX were both positive, with the Sox really being the one that was standing out. Here's a look at the individual sectors ranked from best to worst. Top Gun was HGX, the housing sector. Cyclicals were also pretty far up on the list. BKX was positive. BTK was certainly the last laggard. We'll get to that in a moment. XAU was also a source of funds for the market. Transports were down, even though the Dow was up, which is definitely a little warning sign, especially for the Dow theorists out there. And the semiconductors, the Sox, were definitely a pretty good performer on the day. Here's a look at the housing sector. This is important because we've got a 13 exhaustion in play, and the price that it interacted with the risk level. So we do have a pretty important level here that the market tried to take a shot at, but initially got rejected by. So definitely keep an eye on this risk level. That's going to be important going forward. Next up, let's take a look at the semiconductors. Sox had a fairly positive day, but really didn't get much expansion above the previous day's range. Were higher on the day, barely just made a new nominal high close on the move, and made a new high on the move. But definitely starting to see a little signs of fatigue here. Also note that the MACD is starting to level off here. We're definitely losing momentum since we've been in this lateral trading range. Also keep in mind here that the 9-bar setup to the upside here is still in effect, and we're still really weighing on price here. So this 8/8 level is very key. Here, the oil services, OSX was fairly weak today. Not really able to build on this range expansion candle from Monday, so we're essentially still within that Monday range. So once we break out of that, we'll get a little bit more clarity for sure. And Dow transports were kind of sloppy too, still just kind of gaming these two key moving averages, the 50 and the 10. Got the MACD here potentially curling up and getting positive above the zero line, but really just no momentum in this thing, at least at the moment. The BTK was fairly weak today, but did trade inside the previous day. If we break out of this range, definitely make note of that, and we could definitely see some pretty good movement. So to the upside, target's going to be the 8/8 level. 31.25 to the downside is going to be the gap window, and then of course the gap fill below that. Alright folks, as always, thanks for listening. This has been Rich for Tradesight, and please, if you find these videos helpful and informational, give us a thumbs up. Thank you.